Hi, my name is Narendra Kumar, and today I will cover the most important topic of your business is how to match your working capital requirement. And these days when your business is growing and you have a growth plan, you have everything in business plan, but still the reality and the plan has a variance. So we'll talk about this. We'll cover each and every aspects of business plan, and also we'll cover each and every aspects of gap in working capital and how there is a working capital gap in every business. So I will be more specific to the businesses who has online or digital presence, or they do business digitally, so it's more relevant to them. And also who if you are doing business offline and you are a manufacturing company, definitely some of this content will help you to manage your business efficiently. The first stage of business is to understand the sales growth. So typically, as larger sales growth you will have the larger working capital gap in your business. So whatever capital you have or whatever capital you are willing to raise in form of equity, debt or preference share, whatever it is, make a plan for the year, because capital is most important requirement for every businesses for growth. Growth you cannot achieve without having the right working capital in your business, because the working capital is something which fuels the business and it meets the operating expenditure, operating requirement of the businesses. So your turnover plan, your revenue plan should be in a manner so that it can meet your working capital requirement. Now, if you are making if you're a new business owner or you're a startup, your growth rate will be high. So you have to think from where where you will inject working capital. So sometime we used to make a very aggressive marketing plan for customer acquisition, which is a wrong strategy. Customer acquisition should be very slow, because your system should be ready to meet the demand of your product or services. So 10% growth from month to month is okay, is absolute okay, and it may generate profits and sometimes losses, but working capital you can plan. Likewise, if your sales per month sales is 50 lakh rupees by end of year, then you have to keep 1 crore rupees as working capital, assuming the realization of 60 days in case you have a credit to your client or customers. The third stage comes to the marketing plan. The marketing plan is most important channel of financing, whereas your money will go to acquire a customer. Usually in conventional business, in manufacturing business, marketing plan has no such role, because you have a channel, you have a contact to sell your product. But when you are into a B2C business, whereas you have a direct interaction with customer, of course you will have a big audience base, whereas you will require to reach your customer and tell them that you are selling a product, and you should know why they will buy your product, until unless your product or services is unique in the market and the product has demand. So never forget that a unique product has huge demand in the market. So proper research of demand you can do in following ways. If your product or services are available online, you can see what is the Google search, and search is further conversion, and conversion there is a climb. So typically if we have 1 lakh search for particular keyword, likewise let's say you can assume for like in our business, like GST registration or GST registration, if you talk, GST registration has close to 6 lakh search in a month. It doesn't mean 6 lakhs people are looking for GST registration. So proportionate to this, let's say 3% of them will put an inquiry, which is close to 20,000. So 20,000 will be the prospect who are thinking to be a GST registered dealer in India. Similarly, if you are selling a product or you are a digital marketer or software company, so think what software you are selling and what is the search and what percentage of sharing you are willing to keep. Then your marketing expenditure is fixed, and same time you have to think about the manpower cost. So make a manpower cost inconsistent with your working capital in hand. Or so working capital in hand means the capital you have, and same time the profit or losses which you will generate. If you have a profit, it will increase your working capital in hand. If you have losses, it will reduce the working capital in hand. Third stage is the working capital management we have already discussed. So the next topic which we can think is about the human resource plan. So you have to understand, in order to deliver product and services, what is the human resource requirement from month 1 to month 60, or if you have a 5 years plan, then you will have an understanding of gap in working capital from month to month. So gap in working capital, you can have analysis in following manner. You can calculate your overall operating cycle. Means in order to complete, let's say 1 lakh rupees sale, how much capital is required. For an example, if I have a credit from customer, let's say if I give credit to customer, let's say 60 days, and I have credit from my vendor is 30 days, means I need working capital for 30 days to finance my product, not the salary and all. So typically, if your business plan for year 1 is 12 crores and your net operating cycle is 30 days, means operating side of the credit which you have from vendor and credit you give to the customer, so net is 30. So you will able to multiply 12 times of your capital. If I have a capital of 1 crores, I can generate a turnover of 12 crores. So this is how working capital works. So there is a proper calculation for this, and the source of finance is usually promoters' own capital, or you can raise equity debt from the market, from venture capitalist or angel investor. If your concept or product has such viability, such long-term sustainability which can impact customer, then definitely you can raise. Third option is bank financing, which is typically difficult for the startup at the early stage, because you will require to prove your worthiness, you will require to produce the financials of the company, and also your own financials as a shareholder, as a promoter, should be well enough to give confidence to the bank that okay, you are in condition to repay the loan. But primarily in my business, what we do, we have a strong working capital management and we have no debt in the company typically. So we are into management consulting, so we have a client base. According to the client base, we have our debtors, we have creditors too, and in order to pay your salaries, meet your expenditure on month by month, we have a very simple calculation that receipts and expenses should be in match. And of course, it's a management consulting firm, so we make profit, and profit goes to building the reserves for taxes. But in case you have a digital business or you are a software company, you should think about the per hour cost, per hour revenue you have, what traffic you have on your website if you are into digital business. As in the beginning of this discussion, I said that this is more specific to digital business. However, if you are a manufacturer of a product, then manufacturing has a cost and investment. So typically manufacturer used to invest a lot on labor, the labor side and raw material side, and then you need to calculate when you will be able to match the working capital gap. And definitely in India, we have better financing option for manufacturers, because manufacturers produce product and product can be sold off by the bank in case you are not able to pay the loan. But venture financing and the other channel financing is a bit difficult as compared to digital business. So digital business has a better visibility, better viability these days after COVID-19. So strong business plan is necessary. So typically at Enterslice, we prepare a long-term business plan for the company which they are willing to solve their working capital problems. We check their efficiency. We score your every department, every function of the organization in order to understand why there is a working capital gap. Even if you have a positive working capital or higher working capital, means there is some problem. Either you had a previously good growth or currently you are not able to grow. There are several reasons of good thing, also bad thing in the finance. So In case you have any query or any issue in your organization related to working capital or business management or process structuring, sales plan, whatever you have, you just contact Enterslice. We will glad to assist you. We provide several packages concerning to virtual CFO, whereas we manage your finance. We work like a team, so we have a qualified professionals, CFA, CA, and domain experience in your industry, and they have worked as CFO for several years. So typically we work for a big size, medium size, and small size businesses too. So you need any assistance concerning to your business, don't forget, finance and forecast is most important functions of the organization, which typically as an entrepreneur used to miss, and you usually focus on bringing sales, but sales is not bringing profit for you. So this is why our system, our process starts. We work on several reporting systems for the management, what should be the reporting packages, how it should look like, and you will have always a working capital at the front, that what working capital is needed for your business to match your growth. Thanks for watching. In case you have any questions, any suggestions, do not hesitate to comment below on the page, and don't forget to subscribe our channel for further updates in the similar business line of financing, virtual CFO, legal, tax and audit. Thank you very much for watching. Jai Hind.